The problem scenario in these assignments are about a famous influencer in Malaysia, Miss Hanis, has to face the confusion about her tax obligation under the self-assessment system SAS. Because of that, Ms. Hanis chose to ask the IRB about her responsibility as an influencer. Because she earns more than 3,000 a month from sponsored brand content, paid review or online sale through social media, she is not sure about what exactly and the step that she should take to comply with the rule and avoid penalty. So these are the actions to ensure that she comply with self-assessment system, SAS, and understand her tax obligation. Firstly, she may make a research and study about tax law, register with LHDN, maintain accurate record, declare her income, submit the tax return, pay tax owed, and address discrepancy or issue. Support document of income, accessing e-filing and ITRF, fill all the information of ITRF and fulfill other requirements. In conclusion, Ms. Hanis can refer to LHDN by submitting her income statement, and from that she will be allowable to pay the tax based on her statutory income, and she may get a few deductions if she has fulfilled the particular that suit with her. As for that, Ms. Hanis has to focus for every change in her income, or in other way, she need to notify LHDN for every change in her income. Other than that, Ms. Hanis need to make sure that she will be punctual to all her tax that are allowable to be paid to avoid from getting penalty or punished.
Under self-assessment, Ms. Anis are required to report their income, determine their tax obligation, and pay the taxes owed within the allotted time. The tax return is considered a notice of assessment upon submission, and the amount of tax due for the year must be self-computed. The tax return is submitted no later than April 30 without business income or June 13 with business income in the following calendar year. E-filing or online filing of tax return via the internet is available for those who wish to file their returns using this method. Firstly, Ms. Anis needs to register as a taxpayer with LHDN and obtain a taxpayer identification number (TIN) if she has not already done so. A TIN number is a unique number issued by the RIBM or RIB, given to individuals and businesses that function in Malaysia. Ms. Anis will need the TIN to claim tax break on income earned in other foreign countries. TIN assists her in paying tax, ensuring compliance, and obtaining tax benefit under Malaysian tax and legal requirement. To obtain a TIN in Malaysia, Ms. Anis must go through the registration process with the RIB, either through the RIB online e-daftar system or at IRB branch offices located throughout the Malaysia. Next, self-assessment also includes the responsibility to keep documents. Section 82 of the Act requires an individual such as Ms. Anis to carry on business to keep in safe custody record for a period of 7 years from the end of relevant year. Self-assessment usually provided with printed receipt with serial number if the sale exceeds 150,000 or provision of service exceeds 100,000. In the effect of 2004 year assessment, monthly tax deduction system will continue to operate on employment income, but an individual is also required to pay his tax on business and investment sources by installment. The estimated income tax payable for year assessment 2023 shall reduce by the amount of tax attributed to employment income. An individual has to submit his return from BE by 30 April 2024 or from BE by 30 June 2024 for income derived in the year assessment 2023. The balance of income tax payable of an assessment rises. After deducting the tax on installment and the MTD shall be accounted for the date return is submitted. Amendment of return with effect of year assessment 2009, taxpayer is allowed to amend their tax return within 6 months from the date of submission of such tax return to RIB. Employee in Malaysia is mandatory under Section 77 of the Act to submit income tax return from BE no later than 30 April 2024. Section 77 was legislated governing such election. Once the conditions stated are fulfilled and no tax return has been submitted by such an employee, the employee will be deemed to have made an election under Section 77C. The total monthly tax deduction in that year assessment shall be deemed to be amount of income tax payable for that year assessment.
In the context of taxation, the terms of return and assessment refer to the important element of the tax procedure that give taxpayer and tax authorities a framework to guarantee precise and efficient tax collection. A tax return is a comprehensive document submitted to tax authorities, and income tax is a yearly tax on revenue generating income. The Income Tax Act 1967 ACP governs the administration and collection of income tax for taxable individuals and income. The first type of tax assessment is self-assessment, which occurs when an individual is single, divorced, or has no income. The other option is to be assessed separately if the individual and spouse choose to do so. Both parties must timely file their tax return. Section 77, paragraph 1 of the Income Tax states that the Director General has the authority to demand that an income return be sent in a specific format. Individuals in Malaysia must pay tax return because the government uses the revenue to administrate and manage the country. So, a tax return is a taxpayer's initial submission of financial information, whereas an assessment is the subsequent review and verification process performed by tax authorities.
An amendment of tax return acts as a correction when there are any errors made when filing out forms either manually or submitted online. To amend tax return, the taxpayer shall send out letters outlining the errors with supporting evidence such as invoice or purchase receipt to the application. The application is then sent to Hasil Office that is in charge of the taxpayer's income tax file. The amendments can be made by submitting amended return form ARF within 6 months after the ITRF income tax return form submission deadline. The taxpayer is permitted to self-amend any information or assessment in the ITRF that have been timely submitted to IRBM. Self-amendments can be made once every assessment year after the ITRF have been timely submitted. However, the taxpayer is not permitted to submit ARF to Director General if the Director General have made a revision and issue an updated assessment within 6 months of the ITRF filing. The taxpayer shall send out letters to IRBM if they wishes to amend or voluntarily disclose the amendments made by the Director General. The taxpayer may self-amend any information or assessment in the ITRF to address on the income under declared or not declared, the expenses or claims of a claim, the capital allowances or incentives or reliefs of a claim, or the changes that may result in the ARF submission, such as from not liable to taxable original assessment notice, from taxable to additional tax or additional assessment notice, or from repayment to reduced repayment original assessment notice.
Encik Zaidi irresponsible approach towards income tax issue was brought in light that has stakes in the passage. Due to his negligence that he developed selling on social media, he has now faced with financial burden of 40,000 ringgit in unpaid taxes, which has to be paid up in less than a month. He could not brush it off or treat it as insignificant at all. Encik Zaidi was struck with shame for not filing his taxes on time as the gravity of his mistake dawned on him. So he is required to pay a fine of no more than 20,000 and also may imprisonment for 6 months on unreasonable ground due to his negligent action. This action demonstrates his careless disregard the payment of tax charge on his income of 40,000 ringgit. For the appeals, the taxpayer has right to appeal under Section 99. Form Q must be submitted with the period given. There are two types of assessment. The first is additional assessment or best judgment assessment. The submission deadline is within 30 days after the serving of notice. The second one is advanced assessment. The submission deadline is within the first 3 months for the year assessment, following the year assessment which the assessment was made. Next, submission of notice of appeal, which is Form Q. A taxpayer is required to submit 4 copies of Form Q for the each year assessment to IRB branch. The 4 copies of Form Q must comprise at least 1 original copy. A complete Form Q must contain detailed grounds of appeal, which is the reason of disagreement, issue to be trial, date and amount the tax payable, and lastly the signature by taxpayer.
So, in conclusion, the article discussed the Inland Revenue Board, FHDN of Malaysia's proactive measures for monitoring and actioning tax compliances among social media, influencers and digital entrepreneurs. The case of Zaidi and influencer serve as an example. The consequence of failing to pay tax. Zaidi apologized for not taking tax matter seriously and acknowledged the significant amount that he had to pay as a result of LHDN investigation. The article also discussed the difficulties encountered by LHDN in monitoring social media platforms. Ms. Hanis, a top Malaysian influencer, contacted an IRB officer in response to the article seeking clarification. The officer informed that he had more than 3,000 ringgit per month for various online activities must pay income tax. The officer explained SAS and emphasized chargeable person's responsibility to follow income tax regulation. Ms. Hanis expressed her confusion after receiving this information. This emphasized the importance of influencers being aware of their tax obligation. It also seeking for the professionals' advice to navigate the complex landscape of tax compliance in the modern era.